Why did they post $1 billion loss in 3 months, John?
Well, I think there's a number of reasons when you look at it. I think the first quarter out of the gate for a company like Lyft, you get a lot of expenses associated with going public. You get a lot of expenses associated with option expense. You get a lot of, really at the end of the day, expenses associated with the transition from private to public hands. But when we looked at the numbers, we actually found them to be, on an adjusted basis, on an EBITDA basis, a bit better than expected. But most importantly, better than expected on the top line. Rider engagement levels and participation levels were quite strong. And the most important thing we heard in the call was that 2019 will mark the peak year in terms of losses in the business. And while there's no milestone in terms of when profitability will arrive for the company, definitely a view that the losses will peak this year, and the going forward profitability more enhanced. So we actually shook out on things on the first quarter a bit better and a bit more optimistic for the company than we had been previously.
Is there anything that you've seen in the guidance or the numbers, John, that would make you upgrade or change your rating on the stock?
Well, I think, first of all, the fact that they gave guidance was encouraging. I think a company with the growth that they're seeing in the business, but also the investments that they have ongoing, is really a difficult one to model. So I give them credit for giving guidance, especially in the early stage that they're in. And it takes some volatility out of the stock. But the upgraded from us is really more of a big picture item. We're not yet comfortable with the competitive dynamics with them and Uber, especially with Uber, arriving in public markets sooner rather than later. I think one of the key battlegrounds for them will be how do you protect your market share in the U.S. and how do you prove to the investment community that you're not a pioneer, but you are truly a strong brand and you have staying power. Because as Uber builds their business globally, the fact that they need to produce that they are a share leader over the long run, I think, will be the most important battleground for that stock.